Today, we are going to be talking about the best tips for managing your credit for a business loan. This is an important topic. I know we've covered this before, but we're gonna go a couple different angles today and dive into it a little bit deeper. As you guys are coming in, give me a hi. Tell me where you're from in chat, where you're listening from. I'd love to hear you guys. Love to hear your stories. And if at any time while we're going through this, you have any questions, feel free to throw them out there. We're more than happy to help and talk you through it and make sure that you're getting all the answers that you need. So before we jump into it, just a couple of weeks ago, we had our business loan broker challenge. It was awesome. Had a lot of fun. Thousands of people inside of the groups and engaged, learned how to offer business credit and business loans. Went so well that we wanted to extend it and do a free live webinar coming up on October 18th. So if you're interested in that, or you want to find out more, you can check it out at creditsuite.com/broker WBN. Again, it's creditsuite.com broker WB. And I'll throw it in the chat here. John Neal says, hey, Keith from Cincinnati. Hey, John, hope you're doing well today. Appreciate the comment. So throw that out there for you guys. So check that out. If you want to learn how you can offer business credit and business funding, free webinar, lots of great information, and Ty's going to be presenting, so it's a good time. So let's jump into talking about managing your business, managing credit to get a business loan. The whole goal today is to make sure that your credit's ready for your next business loan. And when you're looking at this, when you start getting into business loans, business financing, business credit, there's more that you're going to have to mess with. When you're applying for a loan personally, you've got your personal credit to worry about. You know, you've got some things that you have to take care of, but it's just your household things that you're normally dealing with. As a business owner going for a business loan, there's more factors that come into it and more things that we need to take into consideration, like understanding that you have a business credit profile. That business credit profile is going to get reviewed. It's actually a part of the the qualification process. So we're going to talk about how to get your credit how to manage your business credit so that it's ready for a loan. And then we're also going to talk about some tips for your personal credit profiles, some things that you can do for that as well. Because unfortunately, until you get to the millions and millions of dollars in gross revenue, most business loans, SBA, even a lot of most of the alternative lending, they're going to want to see some sort of a personal guarantee with it. So that personal credit profile needs to be great. You need to have good, strong personal credit along with business credit. And we're going to jump into why and go through it. So some factors that affect your business credit and your personal credit differently. So that's one of the things that gets a little bit tricky. But stick with me. We're going to help you separate the business and the personal so that way you can know that you're managing both of them the way that they should be and making the most of it. Finding the balance between managing each of them in the best way possible can get tricky. Excuse me. There are caveats of business credit that don't impact personal that don't impact credit, business credit, and not only that, there's just having both of them the best that they can be is really just going to save you a ton of money. It's going to make sure that you're ready for a business loan whenever you want it. So find the best way to manage both and get the funding that you need. So managing business credit to show businesses that you can handle obligations. Business credit is one of the only few ways that lenders actually have a way to see a payment history. I've said it on here before, and I'm going to keep saying it again, but it's a neutral, unbiased third-party verification of payments. That's why the credit bureaus are so big. That's why they're so powerful, is because their whole job is not to go out and determine if you, the consumer, have good credit or not. All they're doing is they're acting as a liaison between your accounts with the lenders that are sending them the reports, and then populating those, and then bringing the scoring models in to be able to give them to banks to make quick underwriting decisions. They're not making any decisions on you off of who you are, off of any of your demographics. They're simply looking at the data that's provided to them. And so as you're going for a loan, having your business credit intact is a great way to show banks that you can responsibly make payments, that you can be trusted with handling thousands of dollars, if not millions of dollars of credit. It goes a long way for banks to relieve their anxiety, to trust you more with larger loan amounts, and even sometimes just to get qualified for a loan. Then the other thing that we're going to go over is optimizing your personal credit to improve your ability to get business funding. because again, at the end of the day, sometimes you are going to have to invest your personal credit to be able to grow your business, to get the financing you need to keep things moving and to keep things going, and work on improving your personal credit if needed. Because sometimes, I mean, you guys are a bunch of crazy entrepreneurs. It's possible you could have some credit issues. So we're going to work through that. So let's talk about properly managing your business credit. A fundable foundation is absolutely the first step to separating your personal and your business credit. The reason that you want to be you're managing your business credit is two reasons. One, your business credit can be looked at by just about anyone. You can actually go to DMV and you can start requesting credit reports for any business that's out there. It's a public record, meaning that if you're trying to put together a deal with another business, or you have a client that maybe wants some reassurance of your credibility and who you are, they can actually go look at your DMV credit report. They can pull it and access it for free and see what your business credit looks like and see how well you manage your payment. And the other side of it is, as you start building your business credit, you're going to get to the point that you can start doing vehicle purchases, you can get business credit cards, you can get fully revolving credit lines. And these are going to be critical for separating your business and your personal, because the more responsibility your business credit can take on, the less impact it has, and the less influence it has on your personal credit. So that's the goal here, is having that fundable foundation, getting yourself separated. And when you're looking at fundable foundations, we actually have a free mini course. I'm going to have Alfredo kind of poke him here, see if he throws it in chat for me. But basically what you're doing is you're setting up your business to look like a business. And that means you need a business address, you need a business phone number, you're going to look for a website, an email address, all the things that make a business look like a business. That's what lenders are looking for. So basically, they don't want to pull up your your business information, like go online and see. Okay, there we go. It's creditsuite.com/foundation. It's a free mini course. It'll walk you through all the fundability foundation steps, help you through that. But what lenders don't want to see is, they don't want to pull it up and go, oh, this is keithnap@gmail.com. They don't want to see that. They want to see your business name. They want to see like info at, or your first name at, and then your business URL. So having your email in place, having your website there, having an address, all this stuff goes a long way for building out the fundability of the company, for separating the business and personal. Because the more the business looks like a business, that means the more they're going to rely on the actual business assets. And then from there, you want to make sure that all the information is accurate and consistent. Now, these first two steps, the reason these are so important is, it's not just being able to get approved for business credit, but while you're applying, if there are certain aspects, if you don't pass a fundable foundation, if they look on there and they see an email from keithnap@gmail.com, it's gonna get flagged for fraud, because you don't look like a business. And again, if your information isn't accurate across everything, and they see a PO box over here, and then a virtual address, and then a home address, and then this address, and it's all just discombobulated and disjointed, it gives lenders that impression that you're not really thinking through what you're doing, or that you're just there's too many inconsistencies, and honestly, it just looks like fraud, because they don't know where to contact you. It just throws up major red flags. So these first two are really about sailing through the application process, getting to the point that underwriters are really going to look at your loan and actually take your business credit, your business financials into consideration, because you pass a preliminary test of accurate information and actually presenting yourself as a business. So the information that you're going to want to make sure is accurate and consistent is going to be your business name, contact information, and with the business name, it's thinking through little things, like if it's A, B, and C, are you spelling out and A and D, or are you using the ampersand symbol? All of those things need to be consistent. It needs to be, when they do a public record search on you, they can see the business information, and it's congruent with your application, that's congruent with your bank statement, it just all fits in together nicely. And that's what you're trying to do, is present yourself in a way that the business looks cohesive, that there's no holes in it, and that the communication, the contact, all of that is very consistent. And then the next step is, and this is jumping way ahead, we're not getting into the business credit building steps, but if you want that, you can download it at creditsuite.com/EIN. But after those two, the next step, and I think this is where a lot of people miss the importance of their business credit is building a portfolio. Now, when I talk about a business credit portfolio, it's not that you just want to go out and you want to have hundreds of these accounts that are all just sitting out there that aren't getting used because it looks good. But what you're doing is you're setting up an accounting system. You're setting up a credit system that basically goes out and says, "Hey, if you're going to be buying fuel all the time, you're putting all your fuel on fuel cards. If you're running a retail shop, you've got wholesalers that you've got accounts with, that you've got relationships with. And what you're doing is you're setting yourself up so that you have these net 30, net 60, net 90 accounts, so that you're going through, you're getting the stuff that you need instantly. You're able to acquire the services and the goods that you need to be able to keep the business going, keep things moving, and then being able to go back and pay off the credit lines. The more of these that you have reporting, the more of a whole picture it actually paints for lenders. Now they can look at your business credit profile and they can go, oh, you've got $20,000 a month going out in monthly expenses, and we see that you're making $100,000 a month, meaning that they know that you've got $80,000 that could be going towards payroll and other things. But it helps them to see that you have the ability, and not only the ability, but you've already got a proven track record that you can make these payments. And not only that, one, it protects your online purchases. It stops any fraudulent purchases. It makes it so that criminals can't get in and take money out of your actual business account. But the other side is that it's giving you that net 30, that 60, that 90 days to be able to make those payments. So it's buying you more time. It's giving you more breathing room. It's giving you the ability to actually not have money coming out of your account to get the services, to perform your services or to sell your goods, and to really give you that opportunity to get out there, make the sale, make the money, and then come back and pay off what you use to be able to accomplish or fulfill your services. So that's when we talk about a business credit portfolio. It's really a sophisticated plan to be able to finance as much as you can, putting as much on business credit as you can, and freeing yourself up. So that way, it's not just money constantly coming out of your checking account. You can sit down once a month, pay off all your invoices, and just have a plan for consistency, and giving yourself a little bit more breathing room with that. So some more tips about managing your business credit. Use as much of your credit limit as possible while being responsible. Again, that while being responsible is a big key. We actually have a question here from Infamy on YouTube. It says, can a personal criminal record have an impact on entrepreneurship? Unfortunately, yes, it can. And now let's get to dive into that a little bit. When you start getting into business loans, you start getting into some of the traditional financing options like SBA, bank loans, things like that. There are elements, there are lenders that will deny you based off of a criminal record. I have no explanation why. I honestly don't think it's fair, because if you're a free person, I mean, it goes without saying. But that is something that can impact you. But the other side is you can still run a business. You can still get out there. You can still make money. But as you start getting into financing, it could be a little bit trickier. Now, some of the ways people get around that infamy is simply by bringing in like a partner, as somebody who has that financial stability, that has that security, that can kind of strengthen up the applications, or just take on the brunt of the credit side if they need to in those situations. So that's, I hope that answers the question. I see a thank you from you. Quentin says, hello, everybody. Hello, Quentin on Facebook. Glad you're joining us today. Great to see you here. And we have a Facebook user who says, good afternoon. So let's get back to our tips here. So properly managing your business credit. One of the other tricks is use as much of your credit limit as possible while being responsible. This is going to help you in two ways. One, when lenders see that you're using your credit limit, to them, especially like on a vendor account, it means that just means they're making money. They're making sales. They're happy. They love you. They're earning money off of your purchases and your activity. But the other thing that it does is, so like as they see that, they realize that the more of your credit limit they're using, their logic is if we give them more credit, then they're going to buy more stuff and we're going to make more money and they're going to be happier, which is traditionally the case. So the more of your credit limit that you're actually using, the higher your credit limits are going to be. The more they're going to improve them, the more they're going to increase them. But the other side is that lenders can see too, if you just go in and you make your minimum payments and you buy the minimum amount. Now, like I'm an admin in our Get Business Credit group. Love you guys in there. I don't jump in a whole lot, but I'm always watching the conversations that are going on. One thing that I see all the time is people jumping in and talking about what's my minimum payment? What's the least amount that I need to make? A minimum payment is not going to help you with your fundability. The reason is simple. If you have a $10,000 credit line and a bank looks at it and goes, you're only spending $50 of that, it's very obvious to them that they realize that you're just trying to get those extra points on your credit report, but you're not really utilizing it. It's not really an essential part of your business. So the more that you're using, the more value it gives to you. And the other side is if a bank looks at it and says, "Hey, you've got a $10,000 limit, but you're not even using your credit limits." There's a lot of different things that go into consideration with all of this. So use your credit limits as much as you can. Get them if you've got a $10,000, find ways to use it, and again, do it responsibly. If you don't need it, don't use it. Obviously, these are just tips to help you maximize your credit. And here's another little secret. When you're trying to push that credit limit, like if you know that you want to boost, or you know that you're gonna be going up for financing at some point, having those credit limits, they don't have to be used maximum all the time. Sometimes it could just be one good month that shows that credit limit, that max use up there closer to that actual credit limit. So I hope that helps. Another thing is maintain a good mix of different types of business credit accounts. And this functions a lot like on the personal side. It's a little bit different because on business credit, you're not taking term loans into consideration, installment loans. Excuse me, except when you start getting into the vehicle financing. But this is going to consist of vendor credit, having the vendors that you're working with, that you have those consistent relationships with, business credit cards that we're reporting, having the activity on that, and then business credit, business lines of credit, different accounts that you have available, vehicle purchases, having that consistent payment history goes a long way for that as well. But having that good mix of credit shows your responsibility, kind of shows that you're savvy, that you know what you're doing, you know how things work around. So it really goes a long way with that. So that covers the business credit. That's why. So hopefully you got some good tips out of that. So let's jump over to the personal credit side. Let's talk about properly managing your personal credit. Boost your scores by keeping your credit utilization under 30%. This is just kind of the golden rule of personal credit. 30% seems to be that magic mark that when you're it's called your debt ratio. So what it looks at is it looks at your credit limit. So let's say you have a $10,000 credit card with a $10,000 credit limit. You really don't want to go above $3,000 on that credit card. Once you go above that $3,000 mark, it doesn't necessarily hurt your credit score, but it stops having as much of a positive impact. Once you get above the 50% mark, then it actually starts to have an adverse impact, and will start to lower your scores. The reason that the FICO scoring model does this, and the reason that banks find this important, is because as a consumer, what we traditionally have fixed incomes. We know how much money we're bringing in, and so if there's a lot of debt that's out there, there's a large credit limit. It's indicative that we may be leaning too much on our personal credit, and our finances are not secure enough to be able to sustain us without using that credit. I don't necessarily agree with this because, like, for me, I use my credit cards for everything. I don't even use my personal debit card because I don't want money coming out of my personal account unless I'm telling it where to go. So I think a lot of that may be outdated. But if you know that you're getting ready to go in for financing, get those debt ratios under 30%. Give your scores that extra boost that they need. It will go a long way, help you out, help smooth out the process for you as well. And then from there, work towards getting getting credit cards with higher limits. Now, this is something that sometimes we don't think about, but as you start to make that transition of really separating your business and your personal credit, you're gonna need your personal credit while you're kind of getting into the rhythm of getting business credit cards, as getting approved for them, especially once you start guaranteeing your first couple to get things going. What you're going to find is they're going to look at what your credit limit is on your personal credit cards. Because if you walk into them, you go, "Hey, look, I've got a Cap One card with $500 credit limit. I'd like a $10,000 credit card with you." That math doesn't work for them. Now, if you walk up to them, you say, "Hey, I've got a $10,000 credit limit, and I would like a $10,000 business credit card." Now that makes sense to them because they already see that personally that you can manage that credit limit. Now, taking that risk for them on the business credit side is a lot more feasible. It's a lot less risky, and that's all credit scores are. That's all credit is. It's a risk factor. It's a risk assessment to let people know if they let lenders know if they should actually loan you money or not. So work on getting higher credit cards, getting your credit cards with higher limits. Have that consistency. Make the payments. One thing that I have found that works really well with this is if you do go through a period that you're running up your credit cards, or you're like me and you like using your personal credit cards for all your purchases, just pay them off. Pay them off in big chunks, $1,000, $2,000 at a time. And when credit card companies see that you're able to make those types of payments, and you're not just making minimum payments or stretching out over a 10, 12-month repayment plan, when they see that you've got the ability to go through and make those payments, they start improving your credit limits almost instantly. Like I've seen clients that within 3 months, 4 months of doing this strategy, their credit limits start to substantially go up because now they're showing the banks that, look, we've got more money. We know how to manage this. We know how to handle this. And so the banks give them higher personal credit limits, which rolls over to the business credit limits. And it's just a symbiotic relationship between the two. So work on getting your credit card higher credit limits, and then monitor regularly, dispute errors. If there's things that are inaccurate on your personal credit report, you have the right to have that correct. Man, I'm just jumping all over the place here. You have the right for that to be accurate, 100% accurate, verifiable, correct. Don't ever be afraid of disputing errors if they're errors. It's a good way to keep your credit clean, to keep things in order, to make sure that it's doing what it needs to do. And then the last one, avoid too many inquiries. Don't shop around too much. Lenders see this. It absolutely terrifies them. Now, I always thought this was weird at the beginning, but like the more I've been in the credit, like I've been in the credit industry for over 20 years now. One thing that underwriters will tell you and lenders will tell you is when they start coming back to you, they're going to be like, look, you've got 10 different credit card inquiries. Let's just say it's credit cards. You've got 10 different credit card inquiries from a month ago. And the way that the credit reporting works, and everybody knows this who works in it, it takes about 60 to 90 days for a new account to actually show up on your personal credit report and start having an impact. And so when a lender goes in and sees that you have all these different inquiries, but they don't see any new activity, especially if it's within that 60 to 90 days, it throws up a red flag for them. And that's the reason that the whole FICO scoring model actually flags for inquiries, because they know that there's a lull between when you apply and when you get approved and it shows up on the credit report. So what lenders are going to be looking at is they're looking at, okay, is there potentially more credit that's going to be coming available? Are there more financing options that just haven't hit the credit report yet? So avoid those inquiries. Don't use your personal credit unless you need it. And that's just be a good rule of thumb. I mean, just going out and applying for stuff willy-nilly does you no good anyway. Protect it, use it the way it should be, and just keep yourself safe for your next business application. All right, so let's talk about those of us who have challenged personal credit, because it happens. I mean, it's 2022. I mean, personal credit is just a thing. Tips for the challenge personal credit. Building a strong business credit profile can help offset low personal credit scores. If you have a good, strong business credit profile, even if your personal credit is weak. So let's say that you maybe had some credit cards charged off in the past. You're having a problem with credit card companies raising your limits, or you're kind of stuck in that subprime loop of just only getting $1,000 credit cards. You can't really get those bigger credit limits. That's where your business credit profile can come in and really help offset your personal credit, because if your business credit profile has those high credit limits, they're taking that into consideration as well. So even if you've got damaged personal credit, you could still be building business credit to show that, look, this was kind of a one-off situation, but we're still responsible. So building your business credit can go a long way with offsetting your personal credit issues. The next one, work on building business assets. I'm going to say this till I'm blue in the face with you guys. The more assets that you have available, the more successful you're going to be. Just hands down, period. All that at the end of the day. And what I mean by that is not 401k, because you're running your own business. Stocks, bonds, mutual funds, equipment, anything that you can do to start piling in assets into the business will go a long way for getting approved for financing. And it goes back to our 3 C's formula, the cash acquisition. You've either got good cash flow, you have good credit, or you have good collateral, or you have all three, which is kind of the magic trifecta for getting approved for SBA loans. But building those business assets will go a long way for getting you approved for term loans, for secured loans that have amazing rates, low fees, and a lot of times there are actually a lot of those types of loans when you start tying in the assets that don't require a personal guarantee. So it's just a smart thing to do. It's a great thing to do with as you're building the business. And look, at the end of the day, I am 100% convinced that if you need help with your personal credit, hire an expert. Find a reputable company that can get in there. They can dispute the information. They can do it legally. They can help you out. They can help you manage your debt ratios and really just take you through the process of building and establishing your personal credit. What's the old saying? If you think it's expensive to hire a professional, try doing it on your own. It'll save you a ton of time. If you find the right experts, you find people that you can work with. And before I get too many in chat, no, I don't actually have any that I recommend. We've got a lot of credit suite partners that offer credit repair. And just do us a favor, if you offer credit repair or you have somebody that you recommend, throw it in chat for the people who are hanging out here who may need an expert. Yeah, and you guys talk around, get to know each other. Find someone that you like, somebody that you can talk to that you think is going to help you out. So what do you need to do if you need money now? So let's say you're one of those crazy entrepreneurs. You maybe have some credit issues, have some credit card debt that's holding back your credit scores. Maybe you have a couple late payments, a couple collections, things are out there. What do you need to do if you need money right now? There are many lenders that aren't going to rely on personal credit. Personal credit is when you get into the personal credit and the business credit side, this is how you're going to get the best. This is how you're going to get the SBA loans, the traditional financing, the bank's loans with these really high limits, low fees. But there are a lot of lenders that don't rely on personal credit near as aggressively. They'll take credit scores as low as a 550. I've even seen some that are like, look, if they've got a pulse, if they have a credit report, that they don't even really care about it. They just do it more out of obligation than anything. But what they're going to be looking at is they're going to be looking at your cash flow and your assets of your business. They're going to be comparing. They're going to be using different things besides just your personal credit. And with that, there's a lot of options available. You've got cash flow financing, you've got merchant advance financing, you've got the 401k ROBS program, equipment financing, inventory. I mean, the list just goes on and on and on and on. So if you want to find out, if you need some help with that, we would be more than happy. Yes, this is my sales pitch at the end, but I appreciate you guys all hanging out with us. If you need money, we would love to help you out with that. You can get a free business financing assessment. Talk with our account executives. They'd love to help you out. Sit down, understand your situation, help you find the right lender based on what you need for right now. And you can get started with that. It's a free consultation. It's at creditsuite.com/consult. We're always here to help you out. And some of these options, as you're looking at the alternative lenders that maybe don't rely on the personal credit, these are great fillers. These are good. I like to call them like stepping stone loans. They get you to that place where you can start kind of moving things forward of going, okay, you know what? I've got my, I can get a little bit of money now. I can help move things forward. I can get to a place where now I can afford to work on my personal credit. And it just helps to get the ball moving, get you in that point where now you've got loans that are being paid off, and just help build your fundability all the way around. So give us a call if you have any questions. We'd be more than happy to help you out. You can reach us at 877-600-2487. Email us at info@creditsuite.com, or just go check out our new beautiful website at creditsuite.com. Tons of great information on there. And it just looks beautiful. I just pull it up sometimes and just look at it all day because I love how awesome it looks. But if you have any questions, let us know. And by the way, if you like this, share it for me. I love getting my face out there on the interwebs. It's a lot of fun. Use hashtag Business Credit Toolbox, and then you can get access to 5 free tools to easily and quickly build your business credit that's not linked to your personal credit, just for sharing the live stream. It's our way of saying thanks for helping us out. Thanks for letting us empower other entrepreneurs. If you want to check that out, you can learn more about it at creditsuite.com/toolbox. So that's all I got for you. Ty's out of town again on Thursday, so I'll be hanging out with you again on Thursday. If you have any questions, make sure to share them in the chat. We're always watching, and we'll jump in and help out any way we can. And I will see you guys next time. Thanks for hanging out with us.